Were you guys able to see my my broadcast here? There you go. I'll type it into the tech chat. All right. Well, I hope that you guys were able to hear me, because no lie, I've been talking for 25 minutes. It took me until about 9:25 till I got my system. Oh my goodness. All right. Because so I use a streaming service called StreamYard because it allows me better screen sharing and stuff. Perfect. Thank you, Sean. And thank you, Bill. And thank you, Pat. So I use a service called StreamYard in order to get this sort of background and stuff that you see. But then in YouTube, it doesn't always say that that it's been live. So even though I hit go live in StreamYard, I was able to see the comments and everything. It didn't actually necessarily show in YouTube. It actually said, still gave me the option that I still needed to go live. So maybe I better click both just to be on the safe side of things. All right, where did ABML go? It's just right there. All right, so they're hanging out right around that $2 mark. So check out, it's kind of nice actually to see. I know this is a bit lower than what I just said, but down at that $1.43, it seems like an up to about $1.60 or so. So I'd call that a decent area of support that we have. And returning back to that $2 mark actually puts us right around an area of resistance. So those are things that I want to be careful about. For those of you who like to follow ABML or who are bullish on ABML, I have a small position in my growth portfolio with them, and there's a whole lot that's riding on them getting their factory built, and for all the testing in that laboratory that's going to go along with that factory, and testing scalability, sustainability for the lithium battery recycling. This is like hugely early, and you could be waiting a decent amount of time for this stock to really, or I'm sorry, for the company mature and really to reflect in its stock price. If they are able to really capitalize in that lithium ion battery recycling market, then I mean we'll really see a lot of increased price action going on. In the meantime, though, they're a penny stock, and we just want to be careful that they don't. That we don't get burned by them by going too heavy into one stock, especially one that would be a super high risk, like what we'd see with ABML. So just be careful with that. Check out the 200 period moving average that we have. The fact that back here in April that we came down and just gave a gentle tap on that 200 period, and then ended up back up above that. 50 period is finally moving back to positive slope for us, and we're staying right now right above that 200 period. So we have some bullish signs here, and I think that there's this is going to be one that is going to come and go in waves, and we're going to see momentum for it around good news, and it could be overhyped, and then it could the price could just come back down on us as things kind of settle and returns back down to more of a normal corrected valuation for this company. And right now, zoom in just a little bit more, the 50 period that we have could still be acting as resistance for us. We need to see how today shapes up and where we get the close for it. So if the body of the candle closes near that 50 period simple moving average, right around that $2 mark, it could still technically be resistance for us. And to the upside from that, I mean, this thing to move, 20%, 30%, 40% in a few days, or even all in one day, depending on what sort of news comes out around it. That's the nature of a penny stock, that is just going to have that sort of ride to it. All right, so let me see. Looks good, sounds good. Nio Power Day, yeah. So let's go to, I put that back to its homepage. There you go. All right, so Bloomberg, Reuters. There we go. Bloomberg is usually one that they want you to subscribe before they'll actually show you, or they can give you a few freebies. And it's one that I haven't pulled the trigger on. There's only so many, subscriptions that any one person could do. So let me see. Targets 4,000 battery swap stations by 2025. Good. Range anxiety has been major hurdle electric. Okay. When's this from? There you go. Okay, so 1:48 a.m. Wow. So if they're going for 4,000 battery swap stations, then they currently have 300. So they're going to go up over 12-fold, like 12.3 times the current number of battery swap stations that they have. And they say by the end of 2025. So that's what, about 4.5 years on us as for the adoption. Electric cars, the world's largest auto market. Yeah, there's the 300. Sold around 120,000 EVs. So when you look at how many EVs they've sold so far, being 120,000, let me see, just how many has it been? I think that they're around 22,000, 44,000. I think for the second quarter that they're right around like that 43,000 mark. I'd have to look at that. So nearly a third of their EVs have been sold in this year alone, and the year's not even over to a close. This year should end up, according to Goldman Sachs, they're projecting 95,000. That's through the chip shortage and everything. So that's going to sharply increase, and then also scaling up their production over time, and the fact that that they already are having success as they're over in China, plus moving over into European markets. I think that a lot of the price that we see in Nio and the new price target that it has of $69 per share comes through the repeated performance that we see from this. So range anxiety, see what else it says, distance is going to be fast. Okay, Tesla has built more than 850 supercharging, fast charging stations. 65, okay. Yeah, in China, it seems like the battery swap can be sort of popular. I know that right now with the limited number of battery swap stations, it creates a demand for the people who have Nio vehicles. And sometimes they're left waiting in order to get into those battery swap stations. So once they can get their battery swapped, it's not much time at all. However, having to wait in lines in order for that to happen would be one of those concerns of one of the busier areas. And so then building out the battery swap stations over time will be huge. And for Tesla, and I'm bullish on Tesla as well. I think that they're still the pioneers. I still think that they're the ones really carving their way through the EV space, and I think that people still look up to them a lot. Having the batteries as built as part of the frames of the vehicles, while that's awesome for considering part of the structure and cutting down some of the weight that they could have, if you have dead batteries, just how easy is it to switch it out for those dead batteries? And how does Tesla handle that? How does the billing go for that versus battery swap stations? You got a battery that's not quite holding up, it gets switched out through Nio's charging stations, and well, then you don't have to worry about that battery anymore. So I think that there's definite trade-offs to whichever way that you go. And I know that they also have their subscription services, and I think they're also working on insurance plans. Just a monster of the company, and I think that they're doing all the right things in order to make themselves profitable, in order to also really build out those margins, where we see it all translate to, not all of it, but we see a significant portion translate to the bottom line, which is really where we need to look as investors. In the meantime, we're going to have to look at that revenue and the different revenue streams that they have, and look forward into what they're planning to do and watch them kind of hit their benchmarks or exceed their benchmarks along the way. All right. Yeah, so the high end of their estimate that they had, or their projections that they had for June, was to have a total of 22,000 cars for the second quarter, and the low end was 21,000. The fact that they ended up near that top end of it, despite the fact that May was a little slow for them. But then June came back strong and put in a record-setting month. I believe that this is the most that they've ever delivered in a single month. That's incredible for them. And based on what they're looking for all of 2021, it should not be the last record-setting month that we have. There's the battery as a service plan I mentioned. Let me see, update battery technology. Yeah, I didn't mention this part of it, though. Keeping up to date with battery technology as it improves. It's getting better and better all the time, and trying to remember the words that are used when it comes to the layer that's in between the cathode and the anode when it comes to the batteries. But working on a solid state version of that is something that is it John B. Goodenough, I think, is one of those pioneers. He's by this time an older man. He's either in his late 80s or he's in his 90s. He's been in battery tech for a long time, and his name actually sounds sort of made up, but coming up with that, I think it's a substrate, I think is what they call it. But coming up with that solid layer between the cathode and the anode, that's something that you don't get the infiltration or the penetration between the two of them where they cross over and then they cause battery degradation over time, and also for it to even possibly overheat or explode. Going with something that would be more like a gel over to something that would actually be solid would do a lot to not only improve the efficiency, but also improve the quality of the battery over time. So if you haven't read up about battery technology, it's something that is just, I'm nerdy about these kind of things, but I think it's really cool to read about. All right, cost saving measures coming under pressure. All right, well, Tesla staying competitive, absolutely excellent for Tesla. And this is something for technology and competition, something that we want to see, well, as consumers, but then as investors, we want to see, who's going to really come out on top of this thing. But as consumers, this sort of technology and innovation and competition are things that are going to drive down the prices. And that makes it more accessible. That means that being more accessible, you reach a broader audience, and we could have more demand come out from that as a result, which then does really turn back to the investors. All right, cool. GM is getting attention today. Yes, GM is getting attention today. I did mention them a little bit earlier. There we go. There it goes. All right, lots of buying and selling pressure right now, kind of keeping us right around that price where we're at. And I had this chart up a little bit earlier today, and we did drop down below the 50 period, in this case, the 50-day when we look at it. And in this candle, if we finish below it, that could still act as resistance for us versus the support that it was acting as for a while. And then we sort of broke through that, but it is a significant gap up from what we saw yesterday. So if we go over here, says that it's up over 4%, and for a company that's big like GM, that's pretty good for us. So let me see. Open higher, banks and energy stocks rebound. There we go. See what sort of information we get here. Okay, bond yields, futures. There you go. Dow Jones up to 60 points. Futures a little changed. There we go. This is something that I had talked about yesterday, as trying to make sense of what was going on in the market. And, here saying just a chance for investors to digest Thursday's Treasury-driven volatility. And so yesterday was just I'm sure you were watching it. It wasn't really, wasn't great for us, especially in those, in really any place when the markets were down as much as they were. And watching that fall, thinking about moving to safety, that there's a lot of bond buying, which goes and drops the bond yields. As we saw, what's driving that move to safety? Are we expecting some sort of rapid inflation? Are we expecting some sort of big deflation? Are we expecting really sluggish economic growth versus the faster economic growth that we were expecting? Really trying to make sense of all that and seeing exactly what was going on. Had a lot of selling pressure in the markets. So let me get back to GM over here. There you go. GM has potential to trade it at multiples similar to Tesla. Tesla trades, I'm sure as you know, at huge multiples. And if GM were to also do that, then that would really be something that would inflate their price. So right now, the newest price target that was put out that I saw, and I believe it was by WEBULL, was that $84 per share. So from now, it'd be a 40% increase from what you currently see in the price. And so that's a lot of the explanation as what we see here, along with probably some market recovery. There we go. Here, let's maximize this. There we go. So you can see the Nasdaq says it's up 0.24%, not bad. Dow Jones up 1%. So that's a huge upside move. Anything 1% or better is a really big jump when you look at the indices that we have here, and 0.7% up for the S&P, and we have all these trends. Sometimes they tend to cool off, but with yesterday's sell-off, maybe this will go up and then sideways. I don't know if we'll see a big spike downwards unless maybe we have some sort of catalyst that influences one way or the other. Let me get over to what we got here. Pinterest from Angelito. There we go. So with Pinterest, ooh, nice. Look at that gap down that they had. It's possible that we could see some sort of recovery. We're going to have to take a look and see what drove this sort of drop off. But you can see last time that we had that big drop off among all the other drop offs that we've had. It continued and took them all the way back down to under $54 per share, just at the bottom of that tail. If we go across the bottoms of these, somewhere around 55-ish dollars. So $54 or $55 rallied back up to over 81, and now we have another drop again. So I'm going to take a look and see what exactly is causing this. Really, those big tech earnings are what we want to look at that kind of give us a hint at what we're going to be looking at for Pinterest. And Pinterest is quite large. And back when they did their Q1 earnings for 2021, it was their forward guidance that wasn't as strong as we would hope it would be. They expected things to cool off coming out of the pandemic, and now we're getting close to those Q2 earnings, and we'll be looking at their guidance to see what they expect going forward from there. All right, so one day ago, here's a press release about their second quarter results, when they're going to announce them. All right, so it looks like Thursday, July 29th is the date set for their earnings. Let me see, Q&A conference, 1:30 p.m. Pacific time, so 4:30 Eastern time for that conference call. So if it drops at 4:30, that's after the market close. So we could expect to see the after hours move one way or the other, depending on what their guidance looks like. So it'd be neat to see what they've reported for Q2 of 2021, but then even I think more interesting from that would be if they've changed their guidance for the rest of 2021, or if they've increased their outlook for the rest of 2021, or the second half, we should say, or if they've lowered it again, and that will really tell us a lot more. So looking at their guidance and their performance, so hopefully they've outperformed if you're bullish on Pinterest, and if you're bearish and you took a short position, well, then you have the opposite of what I'm saying. But I typically talk about long positions because I trade almost entirely in long positions. So I look from a bullish perspective when I talk about these of what I would hope would happen. I think that there's not nearly as many people who take short positions as take long positions. So that's something to keep in mind as well. In any case, yeah, second half, their guidance is going to be the big indicator for what exactly takes place. So about this drop off, you can see options activity, second quarter results. So I'm not seeing any specific news other than it could be the options. So if the options that they're taking are assuming that there's a bearish outlook for Pinterest going forward, that could talk a lot about if there's bearish sweeps where a whole bunch of put options were purchased, for example. That could be something that could cause us to have this negative price impact, or this downward pressure when we look at the stock price for Pinterest. What are their price targets like? So we're at 75, about a little over 10% upside to this average analyst estimate, covered by 30 analysts. So a decent amount of coverage there. 10 say hold, and let me see, 6 of them say it's a strong buy, and then 12, 13 of them or so call it a buy rating, and then we have that high price target of $100. So it'd be about almost a 50% upside from where they sit right now. Oh, what was that low estimate? I wanted to see that quick. $42. Wow. Oh, there's an underperform. I missed it there. I thought I came up to 29 when I added up the numbers that I called out here. I'm pretty good with mental math calculations, but my short-term memory is garbage. So if I want to remember something, I typically write it down. If it makes it through the short-term memory, it's like a steel trap. I really hold on to that information. But if it doesn't make it past the short-term memory, it gets wiped out pretty darn quickly. So yeah, we'll watch and see what happens. Like I said, it could be those options. It could be what we're seeing in the overall markets, that we see this sort of selling pressure take place. And if I zoom out more, we're sort of sitting almost across the tops of what we see over here back in March and all the way back to even January. So we have a fair amount of resistance ahead of us before possibly making it back there. And if we look at these, they're so spread out here. Come on. Yeah, if we look across these highs, when we hit back here in middle of February after the sell-off, we had a fairly strong rally, another drop, another strong rally. So we have lower lows and lower highs in that. So, but we're bullish on this part. So we'll see how this plays out over time. I think it'll be important that we break resistance here soon if we're going to see this continue to perform in a bullish way. It could fail to break that sort of resistance that we have here. We could have a little bit more of a sell-off leading up to those earnings. So we'll see how that plays out over time. Hello, I'm gonna guess at the name here. Bujislas. If I'm saying that wrong, just let me know. Just took a big position in KVH, sold solid earnings and growth well below all moving averages and RSI. Tell me they good. Well, let's take a look at KBH and see what's going on. Consumer cyclicals, home building construction, that makes sense. Nice. Ooh. All right, so it's covered by 14 analysts, not too bad. 7 of them say to hold it right now. And this would be, what would that be? That'd be 2 out of the 14-ish, maybe. And then this one right here. Okay. So not bad. So if that's 7, then that's 4, and that's 3. So 3 strong buys, and then 4 of them are buy ratings on that. We are below the low analyst estimate of $42, so that's a 5% upside. Not bad. 30% to the average analyst estimate that you would have right there, and then $65 to the high. So would that be $25 up? So 60%. So yeah, we could have some very good moves over the next 12 months for KBH. Wow, they've had a rough time of it recently. When did they start selling off? Okay. So I don't know a lot about the different home construction plays that we had, but right around this 38-ish mark that we have here, so where you can find some decent support, and it looks like we have bounced off of that so far. The market's recovering a little bit today from what we saw yesterday, so that could definitely be part of that. And then if you think about this, sort of like floor becomes the ceiling, that support and resist, or that what was once support can turn into resistance, then right around that $40 mark is where we could expect to see maybe just a little bit of trial trying to get back over that. So it does look like the price targets are still saying bullish for this. The 200 period is still a positive slope, although it's flattening out a little on us, and that could act as resistance. So we'll see how it plays over time. The 50 period, the faster moving average that we have here, is moving down towards it. Got some selling pressure. So if we're gonna look at this with the RSI right now down near 30, so it's above 30, so it's not oversold. It is sitting in a bearish position that we have right here, and that coincides with what we see there. So what we would really like to see when we're looking at this is it'd be nice to see that the price action was dropping off while the momentum of the stock was picking up, that we would see a bullish divergence where there's two different stories being told between the price action, which currently is dropping, and then the RSI, if this were increasing instead of decreasing, then what we would see is pretty good confirmation that we're going to have a reversal soon, and a pretty big in the opposite direction. So what we need to see right now is if this support around the $38, if that holds over time for KBH, and also knowing how recent these analyst estimates are. So someplace you can go to that, especially if you have a premium subscription, would be tip ranks. So KBH tip ranks. There you go. And there's other places that you could go. I think maybe Nasdaq is one that also does price targets and tells you about the dates that were put out for that. There we go. So here, 4 buys, 2 holds on tip ranks for KBH. 40% upside they're projecting as the average. Lowest price target, 47. So almost 20% upside, like 17.5% upside from where it's currently trading. Do they have that? Yeah, so $40. And so moving up from there would be about 17, 18% just to the low price target over time. So that's as of July 2021 to July 2022. And if they're in the home and construction business, then that demand for that is really going to be something that's going to impact over time. It looks like they've. I just want to see how it builds out. There you go. This is what I was talking about for tip ranks, by the way. So if I were to upgrade to premium, which I've mentioned this before the past few times on my channel, I might pull the trigger on this and upgrade to premium because I just like tip ranks that much. It's just so easy. There's so much coverage, and they give analyst ratings. You can see who's talking about it, and to just make your own decision on how much weight they should hold. And they give, I think the ratings are good. But then when you look at these, that they're 5 months ago, 7 months ago, a lot has changed about the market and the housing market in that time. So what we want to see is the dates that would be up here for how recently those dates have been put in. There we go. And then something else that I would do is I would look at the news to find out what happened since May 10th. That the price has just sold off significantly. If it's across the entire industry or sector that KBH finds itself, how its peers been performing. You can do a little bit of arbitrage to see how it's positioned against its peers and see if it is underperforming them, and see if it really is a mismatch between its actual value that it overcorrected to this point and that it's going to pull back up to the other side again. Those are all things that you could look at. Who else we got here? So thank you, Bougie. I'm going to shorten it a little bit just in case I get it wrong. Awesome feedback. Thank you. You are welcome, my friend. Good morning, and thanks for the content. No problem, Polly. And then Polly won a cracker. Oh, that was fun. I didn't expect to see a name like that in the text. Can you view Vertex Energy? I like this stock. Yeah, sure. Let's do it. Vertex Energy. There you go. VTNR. All right. This is one. I think that we have looked at this one before. Woo! Look at that price. So it's wow. So down here it's about $1. And let me see. There's May low price $1.26. So it's up like 8x from where it was back in May until now. That's incredible. All right. And we actually have analyst estimates on it. Three people covering it, 1 strong buy, 2 buys, and they're saying almost a 70% upside to the low analyst estimate. And then 22.33 to the average and 25. So according to the average of this, and I like to look at the average. I like to look at the low if it's one that I'm actually investing in, because I want to see out of the analysts that are covering it, what's the worst one saying, because then I sort of make my plans and my goals off of what the worst analyst estimate says. And so $17 at 70% upside, 70% over 12 months. You know, if you could do that, if you knew guaranteed that the analysts were correct and that we were actually going to hit them, that'd be wonderful. But then again, you would also see prices that would move very much to wherever the analysts are putting those estimates in. So I would like to know. I'd like to read if they have their analyses open to the public. I'd like to read them and find out the case that they're making for themselves and what it's going to take in order to hit these price targets over time. So yeah, they've already moved up significantly. Let's see what it says here. Insider trends, insider Vertex Energy reports option conversion. Okay, I missed a 90-day buying trend. So if an employee has options in a company and they convert it over to shares, then they have the option to sell those shares on the open market unless they're in some sort of lockup period or something like that. And if you see insider selling, typically there's one of two things that could be happening. One, and especially when it's from key members like the CEO or the CFO, people like that, or CTO, depending on the company. But one thing could be that they don't have faith in their own company, that they think that the stock is too rich and they just want to cash out because they expect it to drop over time. So they'd be bearish about their own product, service, whatever it is that they're doing. Another way to look at it is that employees are paid with stocks and options in companies. So if they actually would like to take some of that and actually use it for their own personal purposes, you know, that's one of the reasons why they have employee compensation packages that include stock options. So they would just be taking advantage of something that they were promised anyway. So it's not always a negative sign when you see insider selling. And insider buying is usually a pretty good sign that they're bullish on their own company. So just some things to think about. Looks like they showed up in Seeking Alpha Catalyst Watch. Let me see what else they say. All right. Actually, I'm going to go to their profile and see if it gives me a little bit of insight into what they do. It recycles industrial waste streams and off specification commercial. Okay. Well, it's in recycling, so you could consider it, even though it's in fossil fuels and gas, but the whole recycling part of it, the fact that it is a little bit cleaner than just waste. Yeah. All right. So really be about how efficiently they do all of this, and you know, how much revenue they bring in. Let's see. Do I have? Let me go into the widgets here and pop up their financials and see what the revenue is like. There we go. Financial statements, there we go. All right, so total revenue, and let's do it annually. So year over year numbers, 18, 19, 20. The revenue is dropping year over year. So what I would be looking for is an explanation as to why they're bringing in less. In this most recent year, they could have been impacted by the pandemic. That would be very understandable. 2019 lower than 2018 though. So really in 2021, if we see a return back up to 2019 levels or exceeding 2019 levels, and really just kind of reversing what we see right now, that would be a good thing. Diluted earnings per share, lost to 68. So lost 23, lost 28, and the same thing there. So what I don't know, just from looking at numbers and just by looking at the chart, is what is warranting this sort of price action. So if you have that information on what's causing it or what we see from this, we do have support right around that the high nines or $10 mark. We'll call it a round number support right around $10 per share. It would be excellent to know what's driving their price action, and you know what has happened in 2021, even going back. Okay, so this is what happened since May that merits what we see right now. So that would answer for your valuations. If you look at like a discounted cash flow model, well, they're not quite profitable yet. what we're going to look at is what's really going to determine their revenue over time and how soon they become profitable. And the longer that time horizon is for them to become profitable, the more challenging it is. Like the bigger promises they need in the meantime in order to float those prices. So just some things to consider. All right, what else we got? All right. No problem, Will. SRNG. Soaring Eagle acquisition. All right. I wonder, so if this is it a SPAC? Sounds like one as an acquisition core. And also the price right around that $10. So Soaring Eagle, I feel like 2 billion. I'm trying to see who their merge target is. Is it this Ginkgo Bioworks maybe? Would you happen to know that one, Polly? If it's there we go. Yeah, this I don't know this much about it. So Ginkgo Bioworks, Greece-wired Dutch DNA biotech. Okay. So if this is a SPAC deal, they typically don't drop too much below $10 per share. So right now at $9.90, at least pre-merger anyway. A lot of the risk could be out of this right now. If it's something that you expect to take off over time, they have resisted right around the $10 mark. And even if we look back to the inception of this, it peaked just under $11. So a little bit of downside, a little bit of upside, not a lot of price action in between. Really finding out more about that SPAC deal and what sort of company they're going to merge with. Those would be things that would really tell you a lot more about what's going on about it. No problem, Will. The Qs. There we go. There we are. All right, so when we look at the Qs, I believe that this one tracks the Nasdaq. Let's see. Medium low risk, investment correspond to index prices. There you go, the Nasdaq 100. There we go. So tracking the Nasdaq like it does, go ahead and take a look at the sort of ride that we have had when we look at the Qs here. There you go. Still sitting in bullish territory for us, and as long as we have easy financial policies and tech, and which you'll find a lot of it in the Nasdaq, watching that take off over time, kind of overall look at what we have in the Nasdaq. So we're up above the 50 period, and we're up above the 200 period, and you can see anytime that we dip below that 50, that it seems to be a relatively quick recovery back up over it. So if we look at what the previous peaks have looked like for us, it seems like they're not all that sustained before we get correction, and then we get another run coming out of that. So really looking at the macros of what we have for the rest of 2021 will at least determine what we see for this. So if we keep going with the easy financial policies that we have, it should be very good for the markets, with the government doing a lot of money printing and spending. And so in the short term, we should see that. And then when they start to tighten financial policy and they start to increase rates, and depending on what we see with inflation, those are all things that could impact what we see when you look at the Qs. So or any of the indices that we have. And the Nasdaq has been especially sensitive recently since February in this environment. So even though it's up overall, it still has those times where it just absolutely gets wrecked a little bit. So always something that you have to watch out for. But if you look, even let's go to the weekly chart here. Take out some more of that noise. I mean, you can see it's had a really good run. And when we have those runs, especially a run like this one, and then it corrects for a little bit of while, or it goes sideways for a little bit of time, those are all very natural movements. It just can't go up, only up forever. So those would be things to watch out for as this plays out. And really, what the Fed says, especially if they're going to say that they're going to tighten financial policy sooner than expected. Anytime you hear that they will do it sooner than expected, or they moved up their timeline or progressed, that they're seeing really strong evidence for economic growth. Those are things that are going to kind of put that fear into the market, and then it can give us little areas of drops and pause when we look at the Qs or the indices. What else we got? Beam long term. There we go. All right, so before I get into this one, it's about 10:30. I'm going to start wrapping things up here. So who else we got? There you go. I just want to take a look at the other ones. All right, so I will do Bougie Slaws. Okay, thank you. I didn't know if I should be reading it that way or not, but thank you for that clarification. So I'll do 2 more stocks here, Beam, and then I'll do TMHC, and then I'm going to wrap it up for the day, and then I'll see you guys back on Monday. Early heads up, I have my family vacation on, and I know that I just got back from my honeymoon, but now it's time to take my kids on vacation as well. But that is happening from Wednesday the 14th to Wednesday the 21st. I don't know if I'll have strong enough connection to do live streams down there. I should have enough time that I'll be putting out some other types of videos. But I just don't want you to think that I'm just disappearing. I just have that family vacation. Then after that, I should be right back to the grind, starting back on the 22nd of July. All right, so Beam, we're actually, let me go back to the daily chart. Even though looking at the weekly, it's not so bad. Weekly, we're sitting sort of kind of right around support as the price of 32. And if we look at the analyst estimates, we're just above the low. Not horrible because we're not way above it. We are down below the average fairly significantly. So we still have about a 30% upside to get to the average analyst estimate. And then we have 6 analysts. One's a strong buy. 2 of them are saying to buy it, and then 3 of them say to hold it. So we'll see how that plays out over time. Let's go to the daily chart on this one. All right. So just a little bit more telling when we zoom in to see some of these things that we couldn't otherwise see. We dropped down below the 50 yesterday, but we came right back up to it. So even though we were below the 50-day, the fact that we closed right near it, sort of kind of, because we had a big sell-off in the market, but it was able to recover and come back to there. So it could have acted as resistance for us. It could have acted as support for us. Really, with the whole body of the candle underneath, you would call that resistance instead of support. However, today we're right back above it. So we just sort of tagged below, and now we'll see if we go back to treating that 50-period or 50-day moving average that we have as an area of support for us. It looks like the 200-day for a time was almost support for us as well, and we've recently broken down under that. I should point out, if you haven't looked at a lot of stocks, this sell-off that you see in Beam is not unique to Beam. We see this recently, that there's been a lot of correcting for just high growth tech, EV charging, you name it. Like, a lot of them look just this way recently, that you see that sort of correcting after a big run like you've had recently. This went from $20 per share over 40, so it 2x'd in just a few weeks time. Typically you have profit taking, or you have some correcting to bring it right back down. And if we talk like about a 50% retracement, and that's actually where we tagged yesterday, right around that $30 mark. And the fact that we bounced off of it can be a good sign for us that we're still in that bullish territory. We do have a positive slope for the 200-day, and really we want to see this 50 start to curve up and converge on the 200-period moving average. That would be another very bullish confirmation for us moving forward. All right, the other one that I said I would talk about, and Bougie Slaw has tossed it up there for us, is TMHC. Taylor Morrison. Okay. So this is a lot like, was it KBH that we looked at before? I think that's what it was. Yeah, it was KBH. All right, so from what I remember from KBH, this one looks very similar for home building and construction supplies. So this could be something that if it's not unique to KBH, that if it's also affecting, as a matter of fact, May 10th, so it's the same day. So here, let me toss up KBH just real quick. There we go. Just to remind you, there's May 10th. Look where it's at, and then look what happened. It's sold off since then. And then when we look at TMHC, there we go. Which, just to remind you, is in the same industry, and it's in home building and construction supplies and home building. So two of them in the exact same industry, and we see the same, pretty much the same charts that we see a sell-off from May 10th until now. So looking at real estate, maybe new home building is expected to slow down as we get out of the pandemic, and really a lot of that makes sense because the price, there have been a lot of contractors who have, no problem, Angelito. There have been a lot of contractors who would not put out quotes for their homes because of all the like the lumber prices and just the price of materials in general, that it was so hard to get that the prices would be drastically increased. And I felt some of this last summer. I started remodeling the bathrooms in my home, and I remember going out to buy some lumber for it. And like, I remember 2x4 prices when I remodeled my home from 2011 to 2013. I would spend around, it was just under $2 for an 8-foot long 2x4. And I'm sorry for those of you, if you're international, that you don't do feet. I guess it would be close to just under a 2-meter long board. You know, that would be about that wide, about that thick. And it was just under $2. And then I went back to buy some when I was remodeling the bathrooms, and it was almost $4. So the price had doubled from the, what would you say, 2012 prices to the 2020 prices. And then I've heard that they actually had gone up significantly since I bought those, you know, over the rest of the fall and into the wintertime, into the springtime. So if Kathy Wood is right, that there's been a lot of over ordering for these sort of supplies that have been showing really huge demand, and then that the supplies will end up being saturated, and then that demand will sort of just drop, you know, the bottom will fall off demand because there's so much inventory that's being held on hand because of that scarcity that was expected to be around. Those are things that could really cause an upswing for these home building stocks that you see here. With that said, I don't know where the bottom is on this. It's one that maybe I should actually look into, you know, under that line of thought and under that reasoning. But the rally that you saw in 2020 was people wanting to get out of the city and to get into their own homes where they could have their own space. And that was really good for home construction, really good for real estate. And then I think it could be that whole supply, demand, increased price, all being thrown into the mix that's causing us to bottom out, you know, in this industry. So if this is, I mean, we're sitting near support right now, $24 per share. So about not even quite 5% downside in order to get to that support level. Really, I would look to see what the projection is, what's expected for you know, home construction for this industry going forward. If it's expected to boom from here, expected to really rally and increase from here, you could find yourself a really nice place to be in. And really, I would look for the top dog who's really expected to benefit the most from this. And it is nice to see that it's not company specific, that it's not just KBH or TMHC, that it would be probably tied, just from looking at these two of them, it's more than likely tied more to the entire industry than it is to any one company. Analyst estimates, just to drop by. All right, so not bad. We're sitting, what, 20, 25%? So right there between those two numbers, 20 and 25% to the low analyst estimate. And then we have 50% upside to the average, over 10 analysts covering this, and then up $17. So what would that be? That would be about, what, a 70% upside from where we sit right now? So yeah, this is one, like I said, I would look more to the industry to see what's happening, because the price action that we saw recently looks like it's tied more to the industry than it is to the company. And that could explain the price action. It could also help determine more of the future of what's going to take place with it. All right, guys, it's 10:38, almost 10:39. I wanted to wrap it up. Well, actually 10 o'clock is my goal every day, and I always end up going over, but I get excited, and I like to answer the questions that you guys have and provide any insight that I can. So I hope they enjoyed watching. Thanks for coming by, and hope to see you coming back around on Monday. Have a great day.